This is the weekend edition. This is going to be worthy of sharing with your friends and colleagues. My name is Des here at Grok Trade. This video is good through Sunday, October 7th, 2012. Mixed markets on Friday. We started off quite bullish, especially after the unemployment rate hitting, get this, 7.8%. That's a 4-year low. The Dow didn't do too bad though. It's at a 5-year high. The S&P off by just a fraction. NASDAQ off by almost 0.5%. Russell's down 0.2%. Banks in positive territory. Financials doing fairly well. Volatility index down another 1.5%. Gang, we're down below 15 now. Commodities off. Yet again, we have gold off by 0.6%. Silver off by 1.4%. Matter of fact, we'll look at these charts here momentarily. US dollar barely in positive territory. Take a look here at the S&P daily. We had this nice uptrend. I said that we could not get off this support area. Because we couldn't get off this support, I feel like that we have a really good chance of breaking down. However, on Thursday we had a nice little pop. Friday we had follow through. And you can blow this up. Make sure you click the bottom right hand corner to open this up so you can really see this in high definition. Very, very clear. But we had some follow through, but we came back down. This is precisely what I said might happen. I said it back here on Tuesday or Wednesday that if we do pop up here, it might be short-lived. We'd probably hit our head around this 1465 and come back down. We went above, came back down, closing below this 1465, actually closing at 1460. 1461 area. So this is problematic for the daily chart, because if it does start breaking down right here, we will have a trend reversal in the making. It'll be a double top, M for murder, and we'll start breaking down. However, if you look at this line coming across and this line coming up, this is nothing more than an ascending triangle. An ascending triangle, or you could even arguably say this is a bullish pennant, is more bullish than it is bearish, and that is true unless we break this lower support line. So everything hinges on that. And if we do break that, we'll be breaking the 20-day moving average also. If I look here at the weekly chart, you can see this bullish formation we've run higher, 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 busting all sorts of resistance. I mean, areas that we should not have been breaking through, we had broken through. And here we're building a high base. So for the week, we really did exceptionally well. If you look at the monthly chart, for the month so far, we are making a higher low, but we are very extended. Look at this, 1, 2, 3, 4, 5, you know, arguably 4, not 5 candlesticks going higher. So we are ready for a reversal. If we cannot make a new high, this will be a tweezer top and we should start breaking down. Again, we have the support line that we're watching for. All right, let's take a look at the Dow. Dow here is, again, it just slightly made this new high today, but it looks like a double top, like it's going to start breaking down. On the weekly chart, it's a high base that should break out to the upside. A weekly trumps the daily. And if you look here at the monthly it's doing all right. We have these equal highs. So if we do come off of these highs and we start dropping, that will be a tweezer top reversal pattern. We've gone up 1, 2, 3, 4 bars, so things should start turning around. Now here's the monthly chart on the NASDAQ. Now this one, pay attention to. We had these highs here coming across. That's precisely where we closed on the month. And I said close, and I should have said that. The month is not, it's not over yet. We're just right here hanging out. Now the weekly has closed. And check this out. It was hugely important to close on this major trend line. This goes back some time, and I'll spare you. But this is a big time line. We hit resistance here, we bust through it, we broke down below it at one point, so we were in a lot of trouble right here. But you'll notice that we're finding support right there for the week. The thing that I want to point out here is we have a bearish divergence on the MACD oscillator. We're going higher swing high here, lower swing high here. This is problematic for the weekly chart on the NASDAQ. When it comes here to the daily, this is in a lot of trouble. You have a drop. We have not made these new highs. This would not be considered a double top. If it does start to drop here and we have a bearish engulfing pattern and a close below the 20-day moving average, if it does start to drop, this will be a head and shoulders trend reversal pattern. We'd be looking at a neckline right here, oops, right there, and if we break that, then it'd be confirmed trend reversal pattern. As far as the Russells is concerned, same thing. We have not hit these highs like we did in the S&P and on the Dow. This is being relatively weaker along with the NASDAQ, and we are below the 20-day moving average, and this is a bear pullback looking like we're getting ready to drop. On the weekly chart here, we're just in a down leg. We're trying to hold our own, but we're in a down leg. It looks like we have some downside potential. On the monthly chart here, we have a major support line. If we break below that, we're in trouble. Be watching 830, 831, pretty important little area. If we go below that, that should start alerting you to be looking for shorts for sure. That's on the bigger time frame. Now, with this, let's also take a look at the banks. This is the daily chart on the banks. They're making these highs just like the NASDAQ and S&P, not too shabby. The weekly chart, a high base above resistance, really bullish. And then the monthly chart, we're a slow incline with this leg, but we haven't made new highs, not yet. The VIX volatility index, we're at these extreme lows. Every time we hit these extreme lows, we tend to bounce, 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 big bounce there. We just go back in history to see that. So be very, very wary when you have a VIX at 14. We're at 14.33. Gang, that is, the complacency is so low now. When the VIX is low, it's time to go. You have to be cognizant of where the VIX is, and I'm just letting you know there's the warning. However, you can go into a state of complacency for a long time. These can last for some time. So if it doesn't do an immediate touch and go, there could be it could sustain that level for some time. So all right, so look at some stocks here. This is Apple, and Apple's just breaking down. It's just, I really thought it had a chance, you know, touching the 50-day moving average, the doji, and popping up. I thought we'd be rallying, but people are just selling in to that strength on big volume. So I said back here that this was, look at Apple as a short, and you know, people couldn't believe what was coming out of my mouth, and sure enough, I mean, we were at 705, now we're at 652. Let's look at a weekly chart. Now this is where we have some hope. Now here's the issue. We have a rising wedge. Those are bearish formations. So all you Apple junkies out there, pass this video around. There's a lot of Apple threads out there on Google, on Elite Trader, on Trade to Win. You guys put this video on here so you can learn something from it. But Apple here has a rising wedge. That is in fact bearish. That is problematic, and this is on the weekly chart, which trumps the daily. Huge problem. Furthermore, the MACD centered oscillator is a huge bearish divergence. Problematic. That is a problem. That could be an issue. We are at support right now, so that 650 is a major area of support due to this main trend line on the Apple weekly chart. So back to the daily, we're right there at that 150 mark. So this could be an area of support. So if we start to drop below that area, say 640, and it rallies back strong, be looking to pick up apples. Pick up Apple stock, because this thing could rally. So you option traders out there, implied volatility here could be working out in your favor. So keep that in mind for you guys that write puts. All right, so let's move on and take a look at Facebook. Over 1 billion strong here. This is the daily. We broke back down. I do not like this. This move here is no good. We have support. We broke down below that support. There's more downside opportunity here. If you look at a weekly chart, we're just chopping around here. I do see us drifting lower. So watch out for you guys trading Apple or Facebook at this moment. And let's take a look at Google. This is a daily chart. Look at this, made another new high. Unbelievable that this thing keeps going higher and higher, but it's doing so on really poor volume in relation to the volume it's used to. So watch for some selling pressure to start coming in. We are so extended on the weekly chart. It is begging to start pulling back. So for you guys who are, you could be writing calls here, buying some put opportunities, because if you are buying some puts right now, implied volatility would really be working in your favor for sure. So just keep that in mind. All right, and on the monthly, nice little pop, and yeah, nothing's jumping out at me there. Let's take a look at gold. And you guys see the news where there's a bacteria that actually creates, they're little bugs, literally microscopic bugs that create gold, and 24 karat gold. It's unbelievable. Jonathan Klein, one of my personal mentors, trading mentors, and also used to be a partner here at the company. We were just talking today. He has his doctorates in microbiology, and it is some fascinating stuff. Anyway, it makes you wonder what that would do to gold prices here. All right, so with this here, a little rising wedge, a little wedgy here. If it breaks down, watch this lower. I mean, that low, we can't go lower at 172. Be watching 172 big time. And a high base though, as far as GLD is concerned, if it continues to build a base here, it could rally. And if it does rally, I'd be looking for a rally over 174. Let's take a look at silver. Silver, a high base on the weekly, could pop here. On the daily, nice high base. Silver looks strong, especially something over $34. Not too shabby. And you know what I'm going to share with you guys? We have a Stock Picks V newsletter, and each weekend I do a Stock Picks V newsletter, and it's a video-based video that comes out with different stock picks that I have, but it's comprised of a bunch of bull stocks and bear stocks fundamentally, and we trade them technically. So it's very strong. There's no other list out there like it. Takes us a whole team. And matter of fact, to all the interns and to Mike, thank you for all the work you guys put into the Stock Picks V newsletter each week. I know it's very laborious, to say the least. But I'm going to throw you guys out some trades that I'm actually looking at for this list. DLTR, all I ask here is if you make any of these trades, if you make enough money, I just ask that you buy the service. It's only $297. You get 2 months free if you just buy it for the year. $297, one-time fee. Every week you get our stock picks. This thing should pay for itself very fast, and then it's 100% profit after that. It's a no-brainer. Big downtrend on DLTR. You have a pullback, getting ready to pop here. So here you have a double bottom, a step up really. It's an inverted head and shoulders, getting ready to break out. If it breaks out over, say, $49, look for an entry on DLTR. MNST, Monster. This is at a big time resistance line, had a high base starting to pop. If it breaks through, say 5705, 5706 or higher, be looking for a possible entry. And what other, let's see here. Oh, you know what, a couple on the bear side. Let's do NFG. This one, if the markets go bearish, be looking at this as a short, 5277, I would say. 5249, be looking for a short on that. And probably another short is SNDK, SanDisk. And here you have an inverted head and shoulders in the making. Once it breaks down, we have a neckline coming. So maybe your first entry will be around, let's put that in for you, 4374. And then if it breaks the neckline, be looking for more shares, perhaps at 4339 also. So again, do the Stock Picks V newsletter if you make any money on these trades. On the website, all you're going to do is go right down here to Stock Picks V newsletter, click on that, and like I said, it's only $297. And this is actually last week's information. You can see I give you the bull list, the bear list, the video, and my picks. And let's go back. A couple of highlights here. Definitely go here, watch our trading videos. They're free. They come out every day. Watch the stock ones with Mark and mine and Nitsa does hers in Spanish, and you have Carolina that does the ETF on the Qs. But if you want to go through a free online course, do this course. It's 30 lessons, 4.5 hours of videos, and certainly look to do the 201s. But then we have the chart school. So there's a lot of information here. It's free. You want to certainly submerge yourself in this information. But more importantly than anything, eventually you need to make the decision to go into mentoring. You want to do that. We'll be happy to be your mentors, but have a phone call with Carolina. It's an interview type phone call just to find out if we even have a match, but that's it. So with that, I'm going to leave you with a question. What is the best trading advice you have ever received? Leave it in the comments below. Take care and spread this video, and thanks for being a part of this community.